this is called the volume generator, and this strategy is based upon mean reversion. So this is for range bound markets, and what you're looking to do is simply trade between these levels here, these green lines here. Now these green lines here simply measure the previous highs and lows over a period of 20. The bottom indicator is simply a bandwidth indicator, so it measures contraction and expansion in the markets. Now if you have a look at the two lines here, above and below, yeah, you can see here we've got 0 and above we've got 100. So what we're looking to do is when the market comes down, below this 100 pops back up, we're looking to buy. If it pushes below, we're looking to sell. As simple as that. So if we have a look at the examples, you can see here as the market comes down, the bandwidth indicator is starting to push up through. We buy it, and there's a clear 18 pips here. If we look up here, market comes, pushes through, starts to push back down. See, it starts to push back down here. Now we don't get much out of this. There's 6 or 7, almost 8 pips. You wouldn't win on this trade, but you get to break even or get 1 or 2 pips. The point is you get a rebate. So it's rebate. Forget about, there's profit there as well. So I mean, look here, we can see the market pushes back down. There's 17 pips here. Now here and here, the market hasn't pushed above below. Even though it's worked out, it hasn't pushed above below, so it's not a valid setup. But the way the bandwidth works, if we have a look here, we've got a high here. The market's come up, test the previous high, and started selling off, and the bandwidth has done the same in turn. So you could have been selling this, but if you didn't take it as well, it's neither here nor there. There's a lot of setups that happen. Now here's another one, and I want to show you this because they don't all work out. So this one failed, but you got 5 or 6 pips out of it, so you still get to break even. Remember, this is about safety. What you're looking to do is get in, stop loss to break even as soon as possible, and let it run and see if it runs. And with this strategy, as you can see here, it's only a 15-minute time frame, so you can see we've got another entry here. Get in, market rallies up, and there's 40 pips in that trade. Now to the downside, we get another setup here to the downside, and then there's 20 pips here. If we have a look down here below, there's 35 pips to the upside, and then this one here gave us a setup, and that did about 9 pips or so to the downside. So as you can see, this is how the strategy works. We're simply looking for the market to come up to test this green line here, which is basically a high or low. But more importantly, we're going to use the bandwidth for our entries. If the market goes up, rejects the top level or rejects the bottom level, we're going to go with that direction and take the trade. So if it rejects the top level on the bandwidth indicator, we're looking to sell it back down. And if it rejects the bottom one, we're looking to buy it back up. It's as simple as that. It's for a range bound market. Now, when you look at a market that's trending, this is not the strategy to trade. We want to be trading the blueprint strategy. So we always want to couple mean reversion with some kind of momentum strategy together, the two of them collectively. So it's nice and easy. When you place your stop loss should be 5 pips above the high. So if the high's here, if you got in here to sell this, stop loss goes 5 pips above, simply measure it. So you see the middle number within those numbers is 50. Because of the extra decimal that all these currency pairs now have, that extra decimal is a pip here, so it's 5 pips above. And you can see quite clearly here, majority of the time, it's going to keep in the market and making money and profitable. It's a nice strategy, very simple. It works. It was put together by a quant fund. Somebody that I know that runs a fund put the strategy together. It's been back tested and proven. It's a brilliant strategy. It works really well when the markets are range bound. On the next video, what I'll do is I'll cover a momentum strategy for you, the blueprint, and that one will give you nice moves. You're looking to hold them and so forth. But this one here, just to take it back, you're looking to, when you get an entry, you're looking to get in. If you buy in here, market starts to move up, stop loss to break even, and then see if it runs. And if it runs, great, you're in the money. If it comes down and stops you out first, you've got out a break even, but you still made your rebate, and you found out for free if you're right or wrong as well. And that's the important thing, is find out for free if you're right or wrong. So I hope that makes sense. You're bound to have some questions. Any questions, give me a call. Call your trader coach or account manager, and they'll go through it in more detail and answer the questions that you have. Thanks for your time. Speak soon.